Good morning. I'm Steve Wolf, Wholesale Marketing Associate at Sprague.
And I'm Joel Williams, Director of Refined Product Sales here at Sprague.
Welcome to Sprague's Refined Products Review, where we discuss what's moving the market and the insights we see every day. So Joel, we saw prices go, up and down last week. What's going on in the markets?
I think we're going to kind of have a theme this episode. I'm going to call it the tipping point because I think that's really kind of where we are right now. And, what we have seen is since the outbreak of this war in late February through about the 20th of March, the market has pretty much just steadily gone up. In the last, 10, 11 days since the 20th of March, we've seen the market kind of going up and down in this band. And what that really is that we are at a tipping point in this war, and the market's really trying to assess what's going to happen next. And the reason I say it's a tipping point is that when you look at it, really, we talked last week about actions speaking louder than words. And right now we have sort of words and actions counteracting each other. The Trump administration is saying that negotiations are going well and that we are getting close to a diplomatic solution. So that's obviously putting downward pressure on the market at this point. Yet on the other side, you have Iran saying that there are no negotiations in place. And meanwhile, we see a lot of posturing for a potential escalation of the war. You have troops, American troops, heading their way over to the Middle East. You have seen, just the other day, a Kuwaiti vessel full of oil was hit. We've seen other energy infrastructure airports. The U.S. lost a very significant information plane that we have over there. And, even here at home at Pease, we actually saw a whole bunch of A-10 Warthogs here the other day that apparently have now deployed over there. So where we're at with this sort of tipping point is that the administration has this huge ultimatum out there. And the ultimatum is to either come to a diplomatic solution or the war will escalate. And those are going to be two extremely different outcomes for our market. What we'll see is that if there's a diplomatic solution, you'll see the markets come down very quickly. Obviously there's a lot of ways to go. When you look at the different stances they've taken on terms of what the terms for a diplomatic solution are, Iran and the U.S. are very far apart. But assuming that comes together, the markets would react very favorably to that. On the other hand, the ultimatum that's out there is pretty significant. I mean, it would say, from the U.S.'s point of view, the ultimatum has put in that U.S. would be going after, oil infrastructure, electricity infrastructure, and even water infrastructure. So that would be, decimating Iran. And Iran on the other side has said that they're just going to go after basically every oil field and everything that has to do with energy in the Middle East. So obviously, if that escalates to that level, the sky's the limit. We could see $150, $200 crude very possibly.
If we were to see an escalation, what would that mean for oil supply?
Yeah, in the short term, you'd see a huge supply crunch here. I mean, particularly in Asia and Europe, which again we spoke about a couple weeks ago as being net importers, they would be hit the hardest. And the U.S., while our supply would be okay because we are a net exporter, we are not insulated from the oil prices that are set worldwide. So, in order to keep those barrels here, we would be competing against Europe and Asia, and we'd see prices spike pretty drastically. Again, we could see oil, hit 150, even eclipse the 200 mark. And when we talk about the long-term impact here, again, this is sort of a major tipping point. If we see prolonged high oil prices, first of all, you have potentials for recessions and demand destruction. But beyond that, you also open the avenue for new oil to make it to market. The best way to increase drilling is to have high prices and incentivize drilling. So, if the Middle East continues to look like it's going to be unstable, or if the infrastructure is so badly damaged that you have years of a lack of oil, you'll see the U.S. do more drilling. And quite honestly, this could be the opportunity for Venezuela to kind of invest in its aging infrastructure and get its oil industry back up. So again, every time the Middle East sort of takes a hit with oil, the world will look elsewhere for oil.
So how about things back here in the Northeast?
Yeah, we are at the tipping point for a few major things here. One being exports, obviously. Currently any crude or products that left the Middle East just before the war are finally, the last drops are sort of hitting ports now. So this becomes very real in the very near term. And, now the supply crunch starts for the whole world. So the question is, how many barrels will be drawn from the U.S. and from the Northeast in particular? We'll start to say we've seen some cargoes going to Europe already that could accelerate. And so again, The challenge we'll have here is that if you continue to sell product overseas, that will be very profitable for companies that are bringing oil up into the Northeast, instead sending it to Europe. But the challenge is to keep those barrels in the North, we'll have to pay more. And the other challenge we have here is that, if that prices got so high that we did look at an export ban, which so far this administration said we won't, is that you could keep prices down, but by doing so, you're also inflaming your relations with all the other countries of the world, as well as you're kind of suppressing the oil industry here in the U.S. because by bringing prices down, obviously there's less of an incentive to increase production. So another tipping point we're looking at is the local inventories. So, what we've seen is that the amount of product coming from New York Harbor up into our markets has been pretty light lately. And so what that tells me is that similar to what a lot of our customers are doing, is that, they're emptying their bulk plants. And similar to how their consumers are sort of letting their tanks drain down. What you're seeing here is coming out of season. Anyone who had inventory is kind of selling through that inventory and putting off purchases at this point. As well as the fact with the backwardation in the market, you have a significant incentive to not carry inventory at this point. So really what we've seen sort of is that drawdown. The question becomes now, as we are getting thin here, where do those next refills come up? People are going to be running hand to mouth, and that's going to be, pretty tight and going to be very tough to do. Obviously, when you're running hand to mouth, any disruption can cause, a major impact. So, it's really going to get tight, and it's going to, we're going to see who can really perform here now. The other tipping point I would talk about here is sort of prices in the Northeast. Again, similar to inventory, what we've seen is that some people were dumping product. Again, inventory carrying is going to get very costly, so some people are doing what they can. So you've seen some low prices of people dumping inventory. Other people have already gotten down to their lower inventory levels, and as such, they look at the cost of carrying, the cost of resupply, and they're starting to have to charge prices that kind of are commensurate with that. So when I say we're at a tipping point there, I mean, really we'll see in the next couple of weeks. I mean, generally in a very backwardated market, you don't see a lot of trades right after the end of the month until the Merc window's over, which is usually about 10 days into the month. So, we'll have a little bit period of time here where we're not seeing a lot of trades, and then we're really going to get an idea for where the physical prices are going to go in these areas. The big question there becomes, normally in a backwardated market, basis comes down. But what we saw after the Russia-Ukraine war started was that actually the demand from Europe was so great that basis actually increased. So, there's a lot to be told here. And again, I think, in the next week or two, we're going to get some more answers here. And then the final thing to kind of add to all this mess is that we're seeing, biodiesel, biofuel prices are starting to go down now as well. Not a lot of biofuels being traded at this point. A lot of it's already in tank and it's kind of higher price stuff. So that kind of, convolutes this whole thing. So, I mean, ultimately what we're seeing is there's just so many different things going on right now that actually, getting pricing to align, it's going to be a little wonky here for the next couple of weeks. So I think we're going to have to wait again and kind of see how this all shakes out. It's no different than anything else. The whole market is just waiting to hear what's going to happen. And as such, we're going to all have to adjust to whatever news comes out. Again, actions will start to speak louder than words.
Speaking of words, do you have any last words for our viewers?
Ultimately, I think now more than ever, I would say that our customers, you guys should be buying what you can sell and selling what you can buy. This tipping point I've talked about, a lot's going to happen in the next 2 weeks potentially. Again, maybe the can continues to get kicked down. But, again, with this ultimatum kind of coming on April 6th, there's going to be a lot happening. And nobody wants to end up on the wrong side of that. So, again, buy what you can sell what you can buy. Stay in touch with your reps and basically continue to just build the relationships with your supplier. I mean, this is the type of situation now more than ever where having an honest, open communication relationship with a supplier is important. And so, we put a lot of trust in our customers. They put a lot of trust in us, and we're going to find a way to get through this just like we always do.
Well, thanks so much for joining me today. Oh, I got a meeting. I got to go. But don't worry. I have a pro who's going to fill in.
All right, I guess let's try that again. Well, thanks so much for joining me, Joel. You look great. Well, thanks very much for having me, Joel. You look great as well. Love the hat. Well, be sure to join us for our next special feature, a look at the history of Sprague, releasing tomorrow, April 2nd. Well, that's all we have for this week. Thanks for joining us. We'll be back next Wednesday with another Refined Products Review. Refine your insight, fuel your success, and happy April Fool's Day. Well, thanks so much for joining me, Joel. Okay, let's start again. Okay, let's do it again. Well, thanks so much for having me, Joel. Thanks for having me. I can't get off
It's
of
hard
it.
to
All
say
right.
you.
Okay, here we go. Thanks so much for me. Start again. Again.
Boy, the other side of the
This is gonna be
table,
live.
you just
Yep.
he
It's
hard.
throws you off.
I know when I'm over here, I feel like I got to screw up the way he normally screws up, so
Exactly.
it's tough.